Quantum computing is so 2025. In fact, the last quantum computing video that we made, I think hardly got any views. We're all concerned about memory stocks. But there are some interesting things happening in the quantum world. D-Wave has announced that they're buying private startup Quantum Circuits. And then a more recent announcement, IonQ purchasing SkyWater Technology. So what exactly is happening here in the semiconductor industry?
In referring back to our last video on quantum computing, we talked about how we have quite a few milestones left until quantum computers are ready, productive, actual economic contributors to the users who will ultimately be the users of those quantum computers. But in the meantime, another big problem that needs to be solved by the quantum computing startup industry is the supply chain. And the existing semiconductor industry and electronics manufacturing supply chain is going to get reused for quantum computers just the same as it has been for decades now for semiconductors. And so what D-Wave and now IonQ are attempting to do here is build out an IDM, an integrated device manufacturer. This slide here taken from our Semi Insider research dashboard. IDMs are the original business model of the semiconductor industry, companies that both design and manufacture their own products. Think companies like Intel, Texas Instruments, Micron, so on and so forth. So in the early days of the commercialization of quantum computers, some of these leaders in developing quantum hardware are determining that, hey, the IDM model actually works pretty well. We think at least it'll work pretty well. Let's go out and buy some manufacturing capacity that we can bring in-house.
Before we break down the deal between IonQ and SkyWater, I want to give a quick shout out to the sponsor of today's video, Fiscal.ai. This chart right here showing what the revenue will be on a pro forma basis with IonQ and SkyWater.
This chart, of course, at the moment does include Q4 2025. Still waiting for the updates from both companies on that. We'll come back to this slide here in just a moment and break down what we're looking at specifically. This is ultimately a really interesting proposed acquisition that IonQ is trying to make here of SkyWater. A lot of financial repercussions that not just change the game for the technology development and their future supply chain, but also the financials behind all of this sort of get really interesting as well. So we'll come back to this again. Fiscal.ai, charts like this for breaking down not just businesses, but also trying to figure out business combinations. It's a fantastic platform.
And you can get 15% off with our unique link, fiscal.ai/CSI, 15% off any paid plan. Let's dig a little bit deeper into this acquisition of SkyWater by IonQ. Here's the press release from the 26th of January. I like that IonQ is calling this the vertically integrated full stack quantum platform company. I feel like they got all the keywords in there.
That is a lot of adjectives. What you need to know from this, though, is the total acquisition price is $1.8 billion for SkyWater, which is a big jump from where it was a month ago. But there was obviously some things happening behind the scenes. There must have been some activity, some quiet rumors taking place. SkyWater kind of ran up in the last 30 days ahead of this deal being announced. So if you caught that ride higher, congrats. And what you're going to get in exchange for that is a combination of cash as well as IonQ stock. There is what's called a collar involved with this. Maybe this reminds you a bit of when Netflix was still offering cash and a bit of stock to Warner Brothers Discovery. They also had a collar in place on that deal as well. Basically, what this means is the total price paid for SkyWater is not going to get too high or too low beyond that $1.8 billion target. So should the share prices get really volatile here in the next couple of quarters while they try to get this deal done, they'll adjust the amount of cash and stock accordingly. Let's call it 40% cash, 60% IonQ stock if you own SkyWater Technology, skyT.
Let's take a closer look at this revenue chart on a pro forma basis. We have SkyWater in blue, IonQ in orange. And as Nick mentioned before, this is only through Q3 2025. And obviously, SkyWater has nearly tripled their revenue in that most recent quarter.
Yeah, sort of. You were setting the trap. Over on Semi Insider, we've talked about this plenty over the course of the last 6 months. So actually, this is an organic growth. If you already own SkyWater, you probably know this already, but what they did was they acquired an old fab from Infineon called Fab 25 down in Texas. And there's a lot of moving parts to that deal as well, which just closed a few months ago. They are going to continue providing wafer fabrication services to Infineon, as well as picking up some new capacity and some new customer contracts along with it. At this point, at this particular juncture, it is a very low profit margin acquisition for SkyWater. But what it did get SkyWater, other than a bunch of new debt on the balance sheet, is it gives them leverage because they were still at this point a very tiny business, now a slightly less tiny business. They have a bunch of revenue, and that gives them financial flexibility when you have a more robust sales pipeline, fresh cash coming in the door every single quarter. Casey, the free cash flow picture doesn't look great in the last 12 months, especially the last quarter post-acquisition of Fab 25. But SkyWater will no doubt be making that a priority, integrating Fab 25 with their existing facilities in Minnesota and Florida, and now, of course, getting ready for the IonQ acquisition.
And in that recent Quantum video, we called out the balance sheet for IonQ because for such a small business, they have a fair amount of cash on balance. They had enough to last through the end of this decade, and now they're making this move to acquire skyT. So do we think this is a good use of some of that cash?
Well, it certainly could be. Again, maybe a footnote here, just like on the last slide with SkyWater calling out the big jump in revenue. That was via an acquisition. The big jump in cash that you see here for IonQ also deserves a footnote. And that is because they issued new stock in the last year to raise that cash. Clear signal when small, fast-growing companies like this in emerging industries see their stock as being overvalued. They sell stock out into the open market and get cash in exchange to continue funding their R&D. So that's why the cash balance jumped as much as it did. If you're an existing shareholder, you got diluted last year again. But the good news is the only thing that really actually got diluted at this point is free cash flow losses. So that's the good news. That's the upshot here. Is it a good use of cash? It certainly could be. Based on the details of the deal, that cash balance is going to dip below 1 billion. Let's say maybe somewhere in the ballpark of 700 to 800 million in cash. That should still leave them enough cushion for at least a few years of R&D. That, of course, does not account for any positive free cash flow that the acquisition of the SkyWater fabrication business might be able to generate in the coming years, especially after the Fab 25 purchase. So just on the surface, as it stands right now, that's what these two businesses are going to look like.
Let's now briefly cover some valuation notes for skyT and IonQ. In blue, the forward enterprise value to sales for skyT, and in orange, IonQ's forward enterprise value to sales. And as you can see, that orange line is quite high, 87x. Ludicrous.
Or maybe we should call it ridiculous.
Don't be ridiculous. I am ridiculous.
Whatever you want to use, it's pretty high. But things change when you look at it on a pro forma basis for IonQ and SkyWater. Now, this is a little complicated. We'll walk through it. So with both companies, we're looking at a multiple of 17x forward pro forma enterprise value to sales. Now, this assumes that IonQ revenue grows about 50% and SkyWater revenue remains flat, which at Q3 2025, the annualized revenue run rate was around 600 million. Now, this calculation does account for SkyWater's acquisition of the Infineon Fab 25 in Texas.
The valuation for IonQ looked pretty crazy on a 1 year forward basis. This deal changes things significantly gives them some potential financial flexibility, perhaps, in making more revenue generating deals. But you still need to ask yourself, okay, we now have this, let's call it quantum computing IDM, where they do design work and all manufacturing in-house. Is 17x still too steep a premium for this one? That will be a question only you can answer for yourself. But I will say, for us personally, we're now intrigued. Color me intrigued. Now, let's just talk through this a bit more, though, before signing off. This is inspiration directly from you. Casey is great at turning literally everything into a pros, cons list. So let's just talk through this, because there are some important, not just positives to IonQ acquiring SkyWater, assuming someone doesn't come up with a rival bid. There are also some potential negatives that you should think through as well that might give you pause before saying, hey, 17x forward EV to sales looks fantastic.
Shall we talk about the pros first?
I'll let you do the pros, and
You gave away my trade secret, my pros and cons list. Let's talk about the pros first. The first one, it creates a quantum company with meaningful commercial sales and the best marketing opportunity ever. You left that out.
Lots of adjectives thrown in there. We're talking advanced packaging, space economy,
Full platform.
quantum computing.
Second pro, while science experiments continue, IonQ can begin early work on developing their supply chain, which is very important for quantum computing.
Super important. We had an interview with quantum computing startup CEO Alan Ho of Colab last year over on Semi Insider, where he pointed out, even if quantum computers were ready to be fully commercialized today, we're talking about computers that would cost upwards of tens of billions of dollars. And for most potential customers, that's just going to be obviously prohibitively expensive. And so you end up with another crazy hyperscaler CapEx issue here. So to really scale this out, yeah, the supply chain is kind of important. You need to drive cost down even while you continue to work on the technology itself.
And the last pro before we move on to our cons list, IonQ gets more access to government contracts, which are a big source of R&D funding.
IonQ, that's where they get their revenue now. SkyWater, the bulk of its revenue, at least pre-Infineon deal, Fab 25 deal, most of its revenue also came from U.S. government R&D funding, specifically Department of Defense. So big increase, perhaps some synergies there in combining both companies' U.S. government contracts under one roof. All right, let me do the cons here. I feel like this is the part that'll take heat, so I'll take the heat.
I'm guilty by association.
So the first most obvious thing you have to think about here is SkyWater unveiled those new quantum computing relationships just in the last few months. And if you're a fellow quantum computing startup and your foundry has now just been acquired by the biggest rival in the quantum computing startup ecosystem, you're probably not going to be super happy about that. What does that actually do to SkyWater's future revenue potential? Quantum computing foundry is by no means their largest revenue stream, but they did say it was somewhat meaningful. What happens here? Is IonQ trying to do a little bit of corporate espionage as well in making this purchase? That's one item that immediately stuck out to me as being a maybe not so great deal for SkyWater in getting acquired by this particular business.
And the second one, they're moving from a fabless design to an IDM design. And there are some big risks with becoming an integrated device manufacturer that we've pointed out many times. You're taking on a lot of risk.
Yeah, absolutely. You're not just an engineer anymore. Now you're also a manufacturer, and now you have to account for future capital expenditures to support that SkyWater business, which now has 3 pretty decent sized manufacturing facilities in Minnesota, Florida, and Texas. So yeah, this does complicate things. There's a reason why the semiconductor industry has gradually migrated away from the IDM model in recent years. But this is possibly just what the quantum computing industry needs right now. Maybe it works for some time, but definitely a risk that needs to be factored in. And then the last one I think is really obvious, so we won't spend any time on it. Combined company IonQ plus SkyWater won't be profitable by any metric. That goes without saying.
All right, there you have it. That's our take on this acquisition. We're more interested now than we ever have been, so we'll keep an eye on it.
An eye on IonQ.
We'll keep an eye on IonQ. Make sure you check out fiscal.ai, the sponsor of today's video, and if you want to interact with us more, check out Semi Insider over on chipstockinvestor.com. We'll see you again soon here at Chipstock Investor.